What's going on, guys? This is Foresight Capital, and today we're going to take a look at Palantir's price action for the week and talk about when we could realistically expect them to break out of the downtrend that they've been in for the past month and start pushing back for all-time highs. But first, you all had asked for it, so I created a Discord for this channel 24 hours ago, and we've already got over 100 active members that have joined the Discord. We've got channels ranging from fundamental to technical analysis, long-term stocks, and even swing trades, and almost anything else you could want to talk about. And if you sign up for the premium version, I'm alerting when I buy and sell individual stocks and updating my watch list on a nearly daily basis. So if you're interested in any of that, check out the link in the description below to sign up for the Discord and join the other viewers of this channel and myself in daily conversations. Also, if you're in the market for a new broker, consider using the link in the description below to sign up for Webull, because if you sign up for a new account and deposit $100, they will give you 4 free stocks valued at up to $1,600 to get your brokerage going. So today, Palantir closed at $23.54 per share, which was down just over 4% on the day. We've seen some very interesting price action this week because overall it's been a flat week, but every day has been plus or minus about 4.5%. So sticking with the standard volatility that we've been seeing in this stock, we saw yet again another 4% down day. Now we've started to identify a range that we're trading within here between the $24.60 per share level that we've been talking about for weeks on this channel, that we just recently tested and broke through and have been using as resistance ever since, and the $22.60 per share level, which again I had been talking about as my price target for weeks. And when we saw Palantir fall to touch the $22.60 per share level, we saw an instant bounce and push back towards the $24.60 level. Now keep in mind, when a stock has had a previous support level that is broken, it tends to act as resistance when the stock is trending back upwards, and we're seeing just that with Palantir. We saw that Palantir broke below $24.60 and over the past week has used $24.60 as resistance multiple times, confirming that this could be a potential big pricing level for the stock in the future, except as resistance to the upside. So it'll be very interesting to see how Palantir trades over the coming days and whether or not we continue to test $24.60 just as we continued to test $27.70 here over the past couple of weeks, or whether or not this acts as a very strong resistance and breaks us down below the support level that we've established at around $22.60. And if that happens, we have to start wondering whether or not the stock's going to fall to around 18, which is the next realistic support level. And by the way, that's where a lot of analysts have this stock pegged on the upper end of the analyst estimates, with some of them having it pegged as low as $14 per share, which is also where there is coincidentally yet another support line. So there seems to be a good bit of downside, but I wanted to talk about when we could realistically expect Palantir to break this downtrend and continue to the upside. And for that, I wanted to take a look at a very simplified version of when we could expect the company to grow into their current valuation and continue appreciating in price. And we'll do that by taking a look at their current market cap. If you look down in the bottom left-hand corner, we can see that Palantir's current market cap is about $41 billion, and they're currently trading at a price-to-sales ratio of about 41, because they're projected to have just over $1 billion in revenue this year. That's notated down here, but these numbers will change if I put my mouse over there, so you'll just have to look when my mouse is not down there to see those numbers. But what I wanted to talk about is I've actually pulled up the price to sales ratios for various sectors across the business world, and this is created by Stern School of NYU, and this information is from January of 2020, so of course we had a very bullish year, and some of this could be a little bit outdated, but overall it's very close to what we've seen long term for these industries, and we can see that sectors tend to have between about a half price to sales ratio to about a 4 for almost all of the sectors across the business world, with some of the outliers like real estate investment trusts and information services being in the 6 to 7 range. And most people would peg Palantir in the software industry, which would put them at an average price to sales of somewhere between 6.5 to 8. Now, Palantir, keep in mind, is currently trading at about a 41 price to sales. Now, these are average numbers, so of course there are outliers that perform much better and much worse. We could peg Palantir, even though they're a mature company, they're just now really starting to grow at exponential clips at over 50% per year, at least from 2019 to 2020, and then again in 2021, their projected revenues are up about 50%. So we could realistically say that they could be towards the upper end of that, and we'll say that even they outperform a little bit and have a 10 price to sales. Now, in order to grow into a 10 price to sales, Palantir would still need to have about $4.8 billion in revenue at their current market cap, where they're trading at $23 per share. Now, next year they're projecting to have about a $1.5 billion revenue year in 2021. So they would need to grow at this same consistent 50% year over year revenue rate for 4 years in order to grow into their current valuation of $40 billion, which, keep in mind, is at a current price of about $23.68, before they could continue to grow, at least from a fundamental basis. Now, this is very simplified because, of course, we've got profit margins to deal with, and you could run an entire discounted cash flow model to determine a more accurate valuation. But just looking at price to sales ratios, again, trying to keep this as simplistic as possible, they're realistically about 3.5 to 4 years from being able to realistically justify their current valuation. That's not even to mention any growth over those years. Now, keep in mind that the lockup is also coming to an end sometime in the middle of February after they announce their Q4 earnings, and that will flood even more shares onto the market and put some downward pressure on the price, certainly. Now, I'm still not certain whether or not I feel that the stock is going to tank, or whether people are going to hold on to some of their shares and not overall flood the market with all of the shares that are available. We'll have to see how that pans out, but that will even put further downward pressure on the stock. And now, keep in mind, this is 4 years of revenue growth to even justify their current valuation. In order to reach the all-time high levels, which was about a $50.3 billion valuation, and keeping that same 10 price to sales ratio in mind, it would take them about 5 years of their current 50% revenue growth in order to justify reaching the $33 per share level that we reached back towards the end of November, when investors were getting a bit over exuberant and buying in at almost any cost. So there's a lot of need for Palantir to grow into its current valuation before it can really be justified to grow further. The good news is that Palantir is signing big contracts. When they sign contracts, they're upwards of $100 million. Some of them have been as high as $450 million, although that was spread over multiple years. So they don't have to sign a ton of contracts. And in fact, they've mentioned, and this article from Investor Place mentions, that their clients are usually clients that do over $500 million worth of revenue, of which there are 6,000 in the world that meet that criteria. So they just need to bring on a small portion of the overall clients that they're able to do business with, but still growing consistently 50% year over year is very hard for a company to do, even 2 years in a row like they have, much less a continuous 5 years to justify even their current valuation, at least according to price to sales. So I just kind of wanted to bring some color to that. Obviously, it's very simplified, and we're going to continue to do fundamental analysis on Palantir, but I don't like to dampen the videos too much with just too many numbers. Although, let me know down in the comments below if you'd be interested on seeing more fundamental analysis and discounted cash flow models, or whether you just kind of like to talk about the technicals and keep it very high level, because I am curious how to kind of talk about stocks in the future. But let me know your thoughts about this video altogether down in the comments. And again, if you're interested in joining the Discord, where we can have a bit more dynamic of a conversation and go in a little bit more depth than we can in these videos, definitely sign up for that using the link in the description. And again, if you're in the market for a new brokerage, consider signing up for Webull, also with the link in the description, to get 4 free stocks valued at up to $1,600. I really appreciate you watching till the end, and if you're new here, don't forget to subscribe. Thanks for stopping by, and catch you in the next one.